ICAI students, let's revise CFI and AFM. Chapter 13 Business Valuation. Practical question 14. The following data pertains to XYZ Inc. So, Inc. is incorporation. That signifies it's a company incorporated outside India. Most probably in US. That will, like how in India we have limited, in US and all it will be Inc. Engaged in software consultancy business as on 31st December 2010. Company income from consultancy is 935 million and EBIT is 180. And if we notice another thing, they engaged in the business as on 31st 31st December 2010, because in US and all the financial year is Jan to December and not April to March. So this signifies it's their balance sheet and P&L. Income from consultancy 935 and the EBIT is 180. Interest on loan is 18. EBT is 165. So tax is 35%. And after tax, this is accounting profits is 105.3. And balance sheet is there. Equity stock 10 million shares of 10 each, $10 each. Reserves and surplus is there. Loans, current liabilities, land and building, computers and software, and current assets are there. With the above information and following assumption, you are required to compute economic value added and market value added. Economic value added is nothing but NOPAT minus capital charge. NOPAT is nothing but EBIT 1 minus tax rate, net operating profit after taxes, minus the capital charge is nothing but invested capital or the total capital multiplied by weighted average cost of capital. So first for we need the EBIT is already there. As we can see, it is 180, and tax rate also we know 35%. So we can easily calculate net operating profit after tax. Capital charge we need to know. Weighted average cost of capital also we have to find out, and then total invested capital is we can find out. Equity stock plus reserves and surplus plus loan. So this will be the equity portion. This is the debt portion. So total of this will give us the invested capital. So which is nothing but 605 in our case, 605 million. Okay. Now we need the cost of weighted average cost of capital. Okay, they have already given, assumption is there 12%. So multiplying that with 605 will give us the capital charge. So in our case it is nothing but 72.6. So 605 multiplied by 12%. Yes, 605 multiplied by 12%. And net operating profit we found out 117. Reducing this will give us the economic value added. As we have previously discussed, economic value is nothing but the extra value the company is giving over and above its cost of capital. In our case, the cost of capital is 72.6 million and the company is making an operating profit after taxes of 117. So reducing that, the company is making an extra value of 44.4 million. Got it. Now the market value added is nothing but the MPS multiplied by the number of shares outstanding and reduced by the equity fund. That is the market value added. It is same like the economic value added. In economic value added, if you see the operating profit minus the cost we are taking, same way in market value added, the market value minus the cost or the book value will give us the extra value, extra market value, right? So first, the equity fund, we know it is 100 plus 325, 100 plus 325, nothing but 425. And we need the market value. We know it is 10 million shares are there. So we have an assumption the market price is quoted at $50 each. So 10 million multiplied by $50 each will give us 500 million. So 500 million is the market capital or market capitalization, or total market cap, what we can say. 500 minus 425 is 75, nothing but the extra market value it is creating. So market value added, MVA. So it is 75 in our case. Yeah, that's it. Thank you.